Hi, my name is Ilya Zlotnik, advisor and partner with Vivaldi Capital Management, and your host to Journeys to the Summit. Today we have Randy Golden on. Randy is a co-founder at Vivaldi Capital Management. Randy, it's great to have you here.
Thanks for having me, Ilya.
As you know, a couple months ago I had your partner and co-founder David Sternberg on, and he had a remarkable story in his journey about what it took to get to a place to build Vivaldi. So really looking forward to hearing what you have to say and your story. And for me, it is really a pleasure to have conversations with the likes of you and David, because you ultimately built a great business, a great culture, a place that I love going to that's given me the opportunity to build my own practice and grow it, and given me the resources and really the support to do really creative and cool things like Journeys to the Summit, as an example. So thanks again for that. And I'd like to start from a place early in your career, in your early 20s, that's very different than the business and wealth management world, which is the U.S. Army.
Right.
So appreciate your service. And talk a little bit about what prompted you to join the Army in your early 20s, that experience, and maybe some lessons you learned that helped shape you once you eventually got into the business wealth management world.
Yeah, it was a long road, but I was faced with a dilemma. I was on academic probation at the University of Illinois after my first semester, and subsequently I found out after my second semester that I had failed out. So I had to figure out a way to, A, be able to afford to go to school because I was on my own and paying for it myself, and B, what I was going to do for the next year, because you couldn't reapply for a 12-month period of time. So I thought about just going to like a community college, getting some courses and doing that and working. And it just so happened I was working at a summer camp as a camp counselor that summer. And when I got home, literally I had found out from my father that I was kicked out of the University of Illinois. And the next day I received a call from an Army recruiter. I took his call and subsequently went in to visit him, and decided that that was an approach that I could take to A, take up some time over the next 2 to 3 to 4 years, and B, allow me to grow and develop, and C, afford me the opportunity to be able to go to school and not incur any debt along the way.
Okay. So definitely a turn that you weren't expecting.
No, not at all, to say the least.
Any experiences that you could share from that, those couple years in the Army?
So careful what you wish for. I remember I flew out to basic training in Fort Benning, Georgia. It was New Year's Eve, 1987. And here I am on an Army base by myself, waiting to start basic training the next day. They had shaved my head. Okay. I had never had a shaved head before.
I'd like to see some pictures.
I can show you some. And I remember thinking to myself, what the heck did I get myself into? Fast forward, made it through basic training, and then made it through, advanced training. And I was hoping to get stationed somewhere that would be fun, enjoyable, somewhere where I could travel, Europe, overseas, etc. And once you know it, I get stationed in what's called the armpit of the United States.
Okay.
Fort Polk, Louisiana. And I apologize to all my Cajun friends. But, I subsequently went out to Fort Polk. I was stationed there, and I was in the Alpha Company, 4th Battalion, Infantry, 5th Infantry Division, and spent a lot of time during those 2 years doing what was called mechanized infantry. So this was prior to the Gulf War, so typically the Army talked about having mechanized warfare, where you're going through various areas, specifically the desert, et cetera, and you have to use mechanized equipment. So whether they're tanks, armored personnel carriers, Bradley fighting vehicles, things like that. So I was attached to company headquarters. I was my CO, which stands for commanding officer. I was the captain's personal liaison. We were pushed to Panama. I had a 9-month stint in Panama, as well as other areas of Central and South America doing drug interdiction work. And then I was my company CO because where I grew up my best friend growing up, his parents didn't speak any English. So I became knowledgeable in Spanish at a very early age and became fluent. So my company commander kind of needed me to get him through the times in Panama because we were constantly communicating in Spanish with our Panamanian counterparts, et cetera. So had many interesting events that occurred while we were deployed, whether we were deployed stateside doing DAGAG or Departure Arrival Control Group missions, whether we were, deployed overseas and doing various works. I remember, getting off aircraft in the middle of nowhere in a jungle, coming out fully loaded, which just means you're coming out fully armed, and setting up a perimeter and people coming up to us, and we're having to, shout commands in Spanish, et cetera, and telling them to leave because we were there and we didn't want any issue, any trouble, et cetera. Spend a little bit of time on the ground, do what we need to do, and then get out, leave the AO. I remember, we were part of Operation Just Cause, which was getting Noriega out of Panama during that time, just prior to the Gulf War, where the U.S. government, George Bush, decided that we've had enough with Noriega and we've had enough of Panama. So we went in there. I remember two vivid events. One was we were driving through the city, and every time you drove through the city, there was PDF, Panamanian Defense Forces, that had little bunkers set up and they're aiming firearms at you.
Yeah.
And threatening you. We're in a Humvee. We come across an accident, a motorcycle accident. Deploy out of the vehicle, and was one of our men, one of our U.S. soldiers that was on the ground. His femur was out of his leg, out of his skin. And there was two PDF forces standing over him, holding a weapon to his face. Immediately got out. My company commander told me to stay. I didn't. I got out, took my weapon, went up to the two Panamanian Defense Forces, spoke to them in Spanish, told them to get away or there's going to be other issues. Called on the radio, called on comms to get back up. Immediately started performing first aid for that soldier.
Wow.
And it was just, that was one experience. The other experience in Panama, not unlike many underdeveloped or not developed countries, is we're driving through, I use the Jewish term shtetls, but
Yeah.
you can understand what I'm trying to say. Really, we're on one side, then there's barbed wire. On the other side are shanties, cardboard boxes, and these kids are out there looking for food, and we're, throwing our MREs, our meals ready to eat, and any other food or candy or beverages that we had, throwing them over the barbed wire just so they can have some sort of nourishment. The last part I remember, there was the Gorgas Army Hospital, which was a hospital in Panama City that was a joint hospital, meaning it was half PDF, Panamanian Defense Forces, and half U.S. Army. We got deployed there on an emergency, and we started to take fire from the PDF. That was the first time that we ever encountered live fire from PDF.
Okay.
And I remember we ran into the hospital, we were securing our interests within the hospital, and we were taking fire. And I just remember the order coming down telling us we cannot engage, we cannot return fire.
Wow.
And at that moment in time, my heart just sank.
Yeah.
Not because I wanted to fire, but because I wanted to protect not only myself, but what we were there to protect.
Yeah.
And we were unable to do so. And then one last story, there was something called the Cárcel Modelo, which is the prison. And one of the missions we were supposed to have in conjunction with Rangers and Special Forces, we were supposed to go into the prison and remove any PDF as well as take out any nefarious elements within that prison, and also search for any U.S. interests within that prison and get them out of there. So I remember that night we went through all the planning, we staged, we did everything. I didn't sleep because I was in the Humvee going in, and my job was to man the 50 cal, which is a 50 caliber large machine gun. So if anyone was going to take fire, I was going to take fire first. Okay. So I just remember that night that I couldn't sleep. So I didn't sleep, and I remember my CO, my commanding officer, coming up to me like at 4 o'clock in the morning and saying, "You ready to roll?" I'm like, "Let's go." And we got out there, we staged, we went to where we were supposed to go, and they DK'd the mission, and we didn't go in.
Yeah.
And after that, my time in Panama was relatively
It's a remarkable.
diminished.
It's just a remarkable experience. to have that under your belt in your early 20s, considering like you go to college? So many, I think about my experience in college. Yeah, I learned.
I had that experience too.
You had that experience. Probably, it seems like your experience was more fun than mine. But then to go to something completely different, I feel like a lot of people, a lot of kids would benefit from that. I can't imagine the amount of responsibility you all of a sudden take on. You're in life-threatening situations, so I feel like you probably get more of the meaning out of life because you know how quickly it could end. Sometimes when you're in your early 20s, you kind of don't realize
No, we're invincible.
how short life could be, or that we're not invincible. Then the discipline, right? So you could probably take that with you and carry it over with you for the remainder of your life.
Yeah, the Army taught me many different things. One is it taught me what I didn't want in life, right? Also showed me, what I could do, what I could withstand and endure, and then how you can get through those things and come out the other side A-okay.
So what didn't you want out of life that you learned from the Army?
Well, I certainly didn't want to. I always had, as a youth, I always had these. I grew up in very humble surroundings. So as a youth, I always wanted something else. I always wanted something that everybody else wanted. I wanted, I wanted to have an account with money in it. I wanted to have a car. I wanted to have nice cars. I wanted to have a house. I wanted to get out of the area that I was in. I was looking for the American dream. And being in the Army, you're surrounded by what is, for lack of a better term, not always the American dream. Most of the Army bases are situated in non-affluent areas, right? And you see a lot of different things in terms of what America can really be like and is like. And it just taught me that, I need to strive to be better. I need to strive to achieve. And if I don't, this is my place. And I didn't want this as my place. My place was somewhere else.
Well, what a serendipitous turn of events for you. So you finished your time in the Army. I know we talked about you went back to U of I.
Yeah.
Finished that, got your degree. And then, what did you do next? Did you know where you wanted to go, or what were the next steps like?
Yeah, here's what I knew. I knew I needed to make money, which is a horrible thing I was 26 at the time because I didn't go back to.
I was in the same situation. You graduate. I had debt at the time. It sounds like you didn't.
No, I had the GI Bill, which afforded me $500 a month to pay for my rent, and then I worked 3 jobs while I was in college to help support my college expenses. I knew I needed to make money, right? I really had nowhere to go. And I had, in the apartment building I lived my senior year at U of I, I used to hang out at one of the apartments below me, and one of the guys used to talk to his stockbroker every day. So I remember telling him, let me talk to him. So I talked to him, asked him a bunch of questions, not only about the market, because I always was interested in the market. I read the Journal every day. I read Barron's every day. This is going back to the late 80s, early 90s. I was always interested in that. And I'm like, how do I become you? So he gave me some insight. And then from then on, starting in March of my senior year, I started applying to, where I could become for lack of a better term, it was a stockbroker back then. Remember, we're talking 1992, 1993. Yeah. So
those don't exist anymore.
Well, really. If they do, I don't know where they're at, and there's really not a place for it in our business, in my humble opinion. But yes.
Yeah.
So I was hired by Prudential Securities, and I went through their training program, and I was there for about a little over a year. And during that time, I lost my mom, and it set me back tremendously. My mom was always my rock because I didn't have a relationship with my father. And I just went through some personal hardships, et cetera, and I wasn't as focused as I needed to be on the task at hand.
I can't imagine how difficult that is. My mom's still a very integral part of my life. I see her almost every day. We live near each other, and she comes over and helps with the kids. So, I can imagine how difficult that is.
Yeah, it's a wonderful thing.
Yeah.
And I remember I told you a story, starting off in the business, it was, effectively dialing for dollars, right? I was tasked with making 300 cold calls a day. At least.
That's a lot.
You were working 12, 15 hours a day. It really wasn't that much. I mean, back then people had answering machines and people actually answered the phone.
Yeah, people answer, but nobody answers. Yeah, you can't build a business that way.
And I remember one of the first clients I landed was a retired couple, recently retired couple in the North Shore. And we talked about fixed income, et cetera. And I remember I was so excited about trying to find a solution for them to deal with, they wanted cash flow, right?
Yeah, yeah.
So I found what I thought was the perfect solution. And back in the day, it was called a UIT, a Unit Investment Trust. And it was made up of a ladder corporate bond portfolio. So they put in a set amount of money and they were going to get, I don't remember what the number was, 6.5%, 7% back in the day. And I remember I was the number one producing broker of that day.
Okay.
And I remember all the, the old guard coming up to me and say, wow, congratulations, great job, unbelievable. And I remember the next day getting a call from that client saying, I just got confirmation, and my confirmation shows that what I bought is already losing money. And unbeknownst to me, I didn't know that I knew there was commission, right? But I didn't know they'd take it directly out of the client's proceeds. I didn't know it was going to reduce his value and what he was going to get interest on. And it just shook me to the core. And I'm thinking, oh my God, did I just make a huge mistake for this person? This is part of their life savings, and what did I do? And I remember I was just crushed. I talked to more senior people that had been in the business certainly a lot longer than I had. We had some conversations, and I went to go visit the client and talk them through it. And ultimately it worked out A-okay for them. But it really, it stuck with me, that experience of, you need to understand exactly what it is you're doing, what you're proposing, what the costs are and fees involved. And it's not just about a transaction, it's about building relationships. And I'm so happy I got that lesson so early on, because back in the day, it was ticket after ticket after ticket after ticket. It was a transaction-based business.
Yeah.
And obviously it's not that anymore.
When I started in the business in 2006, it was towards the tail end of that world. It was just dying, but I started in Ameriprise. I do remember the joy when I first got that client.
Sure.
I was dialing, I was doing all different types of things, and somebody finally said, I'll work with you. But I also didn't feel good because we were doing a lot of A shares. That was the way that it was presented from top down, and it just didn't feel right to me. And maybe same reason that you eventually transition into the wealth management RIA space.
Yeah.
Because it's more customer focused.
Yeah, I started fee-based back in, I want to say, 1997 or 98.
Yeah.
Which is where there's no transaction costs. You're just charging the client a fee for advice, a fee for counsel.
Yeah.
And I was probably one of the early adopters, but I saw the writing on the wall. And I knew how I felt back in the day, that it just was so uncomfortable. I never wanted to, I wanted to do the right thing by the client. I never wanted to worry about there's a transaction cost. That's just, to me, it's just another complication to the whole process and another way for the firms to make money, which they didn't have to do if they took the right tack.
Yeah. Well, it was amazing to have that type of foresight in the mid to late 90s, because I know it took a while for the business to transition to where we're at now,
Right.
which I think is the best for everybody. And well, let's talk about you building your business, because one of the things that you took with you when you and David started to build Vivaldi is your focus on alternatives.
Yeah.
And I think you were also an early mover in the alternative space as it relates to not institutional, but high net worth, ultra high net worth firms.
And institutional.
So
going back to 1997, I really started to delve into the alternatives world.
What prompted you to have an interest in alternatives?
I developed a relationship with somebody that was running money on behalf of some hedge funds.
Okay.
And they basically needed someone to allocate capital to, and I learned the business and learned how to put myself in that position, and I became a very large allocator of a certain type of hedge fund strategy that a lot of the hedge funds used back in the day. And then that prompted me to start looking at other strategies within the alternative universe. At the time I was working at Mezro. Mezro had an advanced strategies division, which was basically a fund of funds, a hedge fund allocation. But that was geared towards their institutional client, not towards their retail client, whether high net worth or ultra net worth. And that's really how I got my start. And that's really what, prompted me to leave Mezro back in 2005 and start my own firm, because I was so geared on the alternative space. And there just really wasn't a home for that for people that wanted to allocate alternatives.
Yeah, Mesero was mainly traditional, value-oriented.
Stock, bond, and for retail clients. And to me, that's great. And there's a place for that in most people's portfolio. But I wanted to be in the stay rich business, not the get rich business. And to me, the path for me was I wanted to strive to provide positive returns regardless of market conditions, right? And the only way for me to do that, after experiencing what happened in the late 1990s, early 2000s, 2011, et cetera, I didn't want to deal with that. I didn't want my clients to go through that. And I personally, with my own personal capital, certainly didn't want that type of volatility. It just wasn't, for me.
Yeah. And what's amazing about this business is no matter what your mindset is, you could always attract enough clients to build a great business, right? Because there's always people looking for that, and it wasn't available. One thing I do want to do is talk a little bit about the specifics of some of the stuff you did.
Sure.
You talked about the kind of the mutual fund market timing.
Yeah. Well, I didn't mention that, but yeah.
Yeah. Well, when me and you talked offline earlier, let's talk about that. I thought that was really interesting.
So I started that, I was at Everent Securities, so that would have been 1996, 1997 before I went to Mesero. And effectively what it does, or what it did, is I was tasked with going to all these mutual fund companies and to various insurance-based companies to be able to allocate dollars to their international portfolios. And the reason being is there was a timing arbitrage. Effectively, the foreign markets closed at 10 or 11, depending on where you were. And if there was carry forward or carry through in the U.S. market, those foreign portfolios were priced at that 10 o'clock time, but if the U.S. market performed positively to a certain degree, and there had to be a relative baseline, then there was a relative certainty to what the next day's return would be for that particular foreign fund. I think it was stopped in 2003. So in the 7 years that I did it, I probably had less than 7 days that I lost money.
Wow.
So figure, 2,500 days, I lost money in 7 of those days.
So effectively that was a risk-free ARB.
Correct.
Yeah, those are harder and harder to find these days.
They're relatively non-existent these days.
Yeah, and if they are, they don't last for very long.
That is correct.
Because of computers and algorithms. But that was different back then in the 90s.
Yeah, so, mutual fund companies had market timing desks.
Yeah.
Annuity companies had market timing desks. Everyone was fully aware of what you were doing, and they wanted the capital. But it, like everything else, when it's too good to be true, it eventually, wanes. And, the arbitrage is no longer in existence because the mutual funds got smart in terms of how to price their portfolios.
Got it. So how did you go about building your book of business and then eventually leaving Mesero to start your own?
Yeah, so by being in the institutional space for market timing, by that opening that up to wealthy families and
Looking for unique things that are different.
It gave me an opportunity to not only, social prospect with these folks as we talked about, but really to gather some clients that I may not have had the opportunity to
Yeah,
get.
because like in Mesero, all the other advisors, or maybe most of them, are calling about mutual funds. And you got 1,000 advisors calling the same wealthy person about mutual funds. Here you are calling them about something unique and different.
Correct.
They're going to listen to you.
Yeah, and that's really also prompted my introduction because I worked for this quasi-family office, and one of the members, was had capital allocated in a hedge fund that David was working at Iron Capital. And that's really what prompted me to start going in and doing the underlying due diligence, both operational and investment, and understanding what David and his team did over there and making.
So that's how you initially met David Sternberg?
That's exactly how I met David.
Okay.
And then, when I left Mesero, I started my own firm, Preservation Capital Partners. Left with zero, raised $100 million in a year and a half, which at the time was okay. But it certainly gave me a base. And I was approached by a large North Shore accounting firm that wanted someone to run their wealth management practice and grow it, was aware of what we were doing. So I sold my Preservation Capital Partners to them, went over there. I was there for, I want to say 4 years. And we grew the business. David had subsequently left Iron when they sold Iron, and he reached out to me, and basically cold called me and said, "Hey, I'm looking for work. Do you have an interest? Can we have a conversation? I said, of course I have. Of course I have an interest. So we met, and he's like, I'll come on board. I'll help you grow the business, and let's create something cool. And I was like, sure. The whole, premise of me going to the accounting firm was they had a instilled customer base, right?
Yeah.
That I thought would be able to benefit from what we do.
Some of the best introductions are from accountants.
I wholeheartedly agree. It just so happened that we weren't getting the introduction rate that I would like.
Okay. Yeah.
And David and I were building the business. And it eventually came to a point,
And they were taking a bigger share.
we formed the relationship with TD. We got alternatives on Schwab. We got alternatives on TD. And nobody was doing that back in the day. We got in the TD Advisor direct channel.
I mean, that was the first time I met you.
Right.
I was a rep at TD.
I mean, I made a promise to Gino Durango, who at the time was our rep from TD. He said, I need 10 million. I said, we'll get you 10 million, but I need 12 months.
Yeah.
He's like, okay. So I got him to 10 million in 2 months. And from there on, it just ballooned.
Yeah. It's remarkable how different that channel is, because nowadays 12 million is like they'd look at you and be like,
They'd laugh.
they'd laugh. I do want to make one comment, which is interesting, like in our view, and I think one of the reasons that I ended up joining Vivaldi and kind of found a home there is, I remember being at TD, and this is before Vivaldi joined, and I was looking at different interesting arbitrage strategies, because I always found it interesting too to be creative within the market. And then you guys joined, and I was like, because everything at that time was all stocks and bonds, and I was like, these are the people that I want to work with.
You certainly gravitated towards us, and we're certainly appreciative of that.
Yeah, for sure. Hey, one thing I want to talk about real quick, and we can go back to that, is you talked about your love for cars.
Yeah.
So let's talk a little bit about that, and because I'm sure that helped with your business as well.
It hasn't hurt.
Yeah, yeah. I'm pretty sure you have to be wealthy to own nice cars usually.
No, you
not
don't
always, but at least a collection.
It started early on for me as a kid, where maybe most kids had pictures of rock bands or beautiful women on their walls.
You have beautiful cars?
I had beautiful cars. A few basketball players, but those were the Nike posters back in the day.
Yeah.
But yeah, I had cars. I always had a fascination with cars. And I remember my father back in the day was in the car business, worked for a dealership. And this family started a Ferrari dealership, which was going to be the second Ferrari dealership in the state of Illinois. The first one was Continental Motorsports in Hinsdale. So they started Lake Forest Sports Cars in Lake Forest. So my dad worked for Rick Mancuso for a short period of time. And I remember my dad brought home from work one day a piece of paper. It was like the old, what did you call it? I forgot what they called the typograph or mimeograph, whatever it was. Kind of like a Xerox.
Before my day.
Before Xerox. And it had a list
Yeah.
of his inventory, which was like 15 cars back in the day. And I kept that list on my wall until I left my house.
Yeah.
Until, we were moved from our house because we were foreclosed on.
Oh, wow.
But I remember checking off my hit list of order of the cars that I wanted.
Yeah.
And to date, I'm one short.
You're one short.
One short.
What car is it?
It's a Ferrari, but I just haven't done it yet.
Is you'll find it, or?
No, I can. It's just.
Yeah, it just isn't done it yet.
Just is. I don't have room right now.
Okay.
But yeah, it really drove my fascination for vehicles. And, we talked about social prospecting. I belong to a car club in Scottsdale, which is where I predominantly spend the majority of my time.
Yeah.
And just going there, I work from there, I hang out there, we do events, we do charity events, we do car shows, walking around meeting people that are into cars, all different types of cars. It doesn't have to be, $1 million car. It can be a $50,000 car.
Yeah.
There's many different aspects to cars that are cool. And just the people that you meet, and, you have a similarity. I'll go on a racetrack, I'll race, I have friends that race.
Yeah.
It's just afforded me the opportunity to meet people with a like mindset. And typically, as you alluded to, people that have expensive cars typically have discretionary capital to invest, and are either business owners, entrepreneurs, or made money the old-fashioned way and inherited it.
I mean, there's no better way than to mix your passions in life, your hobbies, with business. That's like the ultimate dream.
Yeah, I look at like David. David spent his time on the golf course, right, at a country club. I belonged to a country club very early on. But I kind of grew tired of golf. It wasn't my passion. But the folks that are passionate about it, you really have an opportunity. Like you climb, right?
Yeah.
You are, you have an opportunity, you have a distinct time period with those people as you're traversing up the mountains, right? And you could talk about everything.
Yeah, absolutely.
And they get to know you on a much deeper level than just a sales call or introduction. And that relationship becomes more meaningful, that eventually, more often than not, leads to discussions about their capital and what they're doing and growing their capital, preserving their capital, and passing their capital on.
Yeah, that's one of the best parts of this business, or maybe any business, is the relationships you develop, the friendships you develop, and kind of how those networks spawn and expand and compound over time.
That is absolutely the best part. And you know what's funny? It doesn't end. I'm in my late 50s.
Yeah.
It's still going on.
Yeah.
There's still opportunities out there. So it's really unique, and the compounding element is very true.
Absolutely. All right. What's the fastest you've ever gone in a car?
Street or track?
Both.
Track 173, 174.
It's like around the turns, or you slow down as
You're not doing that in a turn. It would be on a straightaway. On a turn, you could probably get up to 120, 122, 123,
Yeah.
depending on the vehicle that you're in.
That's amazing.
Some handle better than others.
I bet.
On the street,
Over 200?
I've not been over 200, but I've been north of 172.
And
which
what car,
is
and what car was
really,
that? What car is that?
A 911 Turbo S.
Wow. That's an amazing feeling, right?
It's a scary feeling.
Yeah?
There's no place for that on the streets.
No?
No,
Okay.
I just had to do
That's
it.
probably in the younger days, I'm sure. Oh, you're still young.
Right.
Okay. All right, so let's go back to you and David paired up.
Yeah.
And you guys had a vision. You decided, and obviously that this North Shore accounting firm was not part of that vision because they were constraining you.
100%.
Yeah.
Yeah. We wanted to reinvest back in our business. We wanted to, for lack of a better term, blow this up.
Yeah.
And we weren't, I think at the time we were at 350 in AUM.
Yeah.
That's nothing.
Yeah, to some people it's amazing, but that was just the beginning. But you guys left. You started Vivaldi Capital Management, which
Yeah.
is an independent registered investment advisor. You custody with TD, and that relationship that you were able to get with TD, talking about relationships, was
Beneficial.
amazing. I mean,
Yeah.
the amount of money that we've been able to bring in through TD and now Schwab, like you probably would have never foreseen that 15 years ago.
You know what? One of the lessons I've learned
Yeah.
through my ages is that you need to think big, right?
Yeah.
I think the smaller that people think, the smaller they are, the smaller they become.
Yeah.
If you think big, A, it's okay to fail, right? You're just that much closer to success.
Absolutely.
But B, you think big, you start to do things in that mindset, and eventually those things come to attract to you, and you take advantage of those things. So one of the things that I learned on, especially with Vivaldi, is you got to think big. Right? You can't be satiated. You can never be comfortable. What do they say? You need to learn to be comfortable with the uncomfortable.
Yeah.
Right? And I think when you're in that particular state, that's when you can garner your most success. So yeah, we started with nothing. When David and I started, we had zero assets. We couldn't bring any money over from our predecessor firm.
Yeah.
We were banned from doing that. We opened our doors. We had a relationship with a family office in the North Shore, a very wealthy Chicago gentleman that was the kindest, nicest person to us and gave us space and allowed us to build out our office
Back
space.
in Northfield.
Yeah. Without him, I don't know that we would have achieved this. David and I started in like a 200 square foot closet. And we had to wait for our space to be built out. It took us, I think, 8 or 9 months for the space to be built out. And we made our first hire.
It's like the proverbial starting like a startup in your mom's garage.
Correct. That's exactly.
It just
what
happened
was.
to be like a family office's garage.
Yeah, and from then on, we stayed in Northfield for a couple of years, and I remember Michael coming to us and saying, "Hey, I'm moving downtown. You guys want to go?" And I said to Michael, "I'm like, hey, we have a lease."
Yeah.
He's like, "You're good.
Yeah.
You can leave anytime. You want to
Yeah.
come downtown? You want to be downtown? That's where you should be. Go."
Yeah.
And Dave and I said, "Wow, let's go check it out." And we did, and we wound up where we're at today.
Yeah. So besides, the focus on alternatives, which was so unique back then, because now the whole world is talking about alternatives. You have Blackstone, you got all these big shops. But before it wasn't really a thing. It was more institutional. But we, you and David and us, we brought it to, and Mike and Chad and Scott, we brought it to
brought it to the masses.
to the high net worth, ultra high net
Yeah.
worth clients. But now you're bringing it even to the mass affluent as well, to the asset management business. So you had that. Obviously the relationship with TD was huge. Are there any other things that you thought about with your conversations with David and Mike and Chad that you think were so impactful today?
Yeah, looking back, there's
building
a
the
few.
business.
So one is, David and I go into these underlying hedge funds and saying, hey, we want to bring X number of investors to you. We know that you don't like, they didn't like the administrative burden.
Yeah.
And so we were bringing, 25, 50, 100 investors to one hedge fund, every investor filling out LP.
The minimums were not what you were probably used to.
Correct. And we were negotiating lower minimums.
Yeah.
And at certain times we were able, when River North launched, which is one of our, arbitrage hedge funds.
Yeah.
Because of my relationship with Brian Schmucker,
Yeah.
I was able to get us in, get a reduced fee,
Yeah.
and be a day one investor for River North. And, we were able to negotiate lower minimums, lower fees, et cetera. And anytime that we could take that template
Yeah.
to another hedge fund, we did that. And we passed through those discounts to our clients. But it was really awesome that those hedge funds allowed us to come on with multiple investors. Eventually, we saw the light and said, whoa, we need to create our own vehicles and go in as one investor, reduce the paperwork burden for them, become one major client for the hedge fund, and get what we need from them. The other point, when we partnered with Infinity Capital Partners, and they had a hedge fund, but that was to high net worth, ultra high net worth. And we created a 40 Act product around that, a RIC, a registered investment company vehicle, that, the masses could buy. And that was really our first foray into that. And at the time, we also had another hedge fund manager we were doing business with, Highland Capital, which focused on merger arbitrage.
Mm-hmm.
And Mike convinced them to, let's launch a mutual fund. We have your track record going back 15 years, and it's amazing. Let's bring that track record to a publicly traded mutual fund.
Yeah.
And let's bring that out. And today, as we look, at the time we had 0 assets.
That's $4 billion. How big is that fund? Maybe three, two?
Yeah,
I can't
3.5
remember.
billion.
Yeah.
And then the last one was really Reflex, which is really our, for lack of a better term, it's our main vehicle, right? It's our
Best ideas.
best ideas, fund of funds, pure alternative vehicle, investing
Yeah.
in a diversified group of strategies, right? We actually launched that vehicle for another firm.
Yeah.
And I remember having conversations with Mike saying, Mike, they're not going to come through. We're going to be stuck holding the bag on this fund, and we're going to have to seed it. That's exactly what happened. We had to seed the vehicle, and we kept it afloat for a period of time until we really started to get a distribution team and grow that vehicle. And then subsequently post our joint venture with, FTCM, really allowed us to, bring that vehicle to the masses and really grow it in a significant way. And today that's our largest.
So there was, at the time, and maybe still to this day, there's nothing like it in the market. And maybe that's one of the things that I enjoy so much about Vivaldi is the ability to be creative and try new things, whether it's processes or investments or what have you, or your approach to working with clients or the show, as I mentioned. I think that's really what makes it fun.
Yeah, one of the things you realize when you're in business is whether you're a founder, whether you're a partner, whether you're a CEO, CFO, it doesn't matter, right? You need to surround yourself with people that are smarter than you and have the same mindset to dream big and be big and can offer various ideas. Mike's been super instrumental in our growth, in our joint venture with FTCM alongside with Chad, and then also in really us forming the beginnings of our mutual fund business, what used to be called Vivaldi Asset Management.
I was the first wholesaler.
Yes,
in
you
that
were. I
business.
remember that.
I hated that job so much.
I don't blame you. But looking back, look
Yeah.
where you're at now.
Yeah,
See,
yeah.
some of us have to go through some of these travails in
lot
order
of-
to get to where we
A
want
lot
to
of
be.
travails, yeah, that's for sure. Well, yeah, business has grown tremendously. Like you said, you started off with a couple $100 million 15 years ago. Now, Vivaldi is getting close to $6 billion.
On our wealth management
And
side
then
of business, yes.
on the asset management side, we're over
We're almost 8.
almost $8 billion, which is amazing. And I feel like, to your point, you got to think big. To me, I feel like we're still in the early innings.
Oh, I don't disagree.
Yeah.
I don't disagree. Baseball analogy, we're in the
Yeah.
second or third inning. We have so much runway, and the transition of wealth that's going to transpire
Yeah.
over the next 10 years is just going to be so dramatic for our business.
Yeah.
On the wealth management side, I'm not speaking about the asset management side.
Yeah.
It's going to be really formative, and it's going to be transitional. And I really think there's no reason why us as Vivaldi Capital Management shouldn't be a 12, 15, $20 billion firm
Absolutely.
in the next 5 to 7 years.
I'm sure we will be with optimism like that.
Well, it takes a village, right? So
Absolutely.
everyone needs to row in the same direction.
Absolutely. So any other thoughts, kind of how you view your future and the work that you're doing and kind of the book of business that you're managing
Yeah. So
and the 401k business that you're overseeing?
so I really don't. I passed that business along.
Okay.
I got it to a point and passed it along to Ben Blumen, as you know.
Yeah.
I still help him from time to time, and with big picture more so than anything else. But he's really taken the reins on that particular business and has done a great job with it, and it continues to grow to this day. For me personally, I just went through it. What am I? I'm 58. I'm still excited about working. I'm still excited about growing. We have so much to achieve and so much runway out there.
Yeah.
Why would I walk away from that? And then, not to mention, I thoroughly enjoy the relationships that I've built up with my clients. We're still growing that. And then I'm also, fortunately for me, I have the opportunity to mentor a few of our younger advisors, Ben Blumen, Jeff Eisman. I look forward to seeing them grow and seeing them get to a level like where you're currently at. And to me, that's really what's important in our business, right? I don't need to get necessarily joy from what I'm doing from that perspective. I've created a core book of business and I keep bringing in new business, and that's great. I want to see others succeed.
Yeah.
That's really where I get my enjoyment from, more so than I do myself currently.
And that's a great part, the mentorship. I mean, even early on when I started, I remember you would come on meetings with me at TD when I did my pitch. So I appreciate that. That was a fun experience.
Listen, we had to do whatever it took in order to get the business and close the business. And, we took a big leap, and I wasn't going to let it fail. Nor were any of my other partners.
Absolutely. Well, hey, thanks for joining.
I really appreciate you
having me. Great
having
conversation, and I look forward to seeing what the future holds.
Yeah, I look forward to every single quarter.
Absolutely.
In subsequent years. I appreciate it, Ellie.